Welcome, and thank you for joining us today for our second online webinar geared to gaining valuable insight into Florida's risk and insurance marketplace. My name is Julie Fess, and I am a governmental consultant here at Gunster Law. Today's webinar will be recorded, and the link to the replay can be found on Gunster's YouTube channel or on gunster.com shortly after our session is over. Also, if you missed our previous webinar last month with State Senator Jeff Brandes, you can find it at our gunster.com website. Today, we look forward to an engaging conversation, and I strongly encourage our live audience participants to ask questions. The audience will remain in listen-only mode. Please submit questions using the questions pane on the Go-To webinar control panel. Your questions will be sent to the organizer directly without other attendees seeing them. Since our session will be conversational style, please send your questions anytime. There's no need to wait until the end. If you can't see your control panel, it may be collapsed. To expand it, click the orange arrow in the upper right-hand corner of the Grab tab. I will now turn this over to my colleague and co-host, Sha'Ron James, to introduce our guest and begin our conversation. Sha'Ron.
Thank you, Julie. I would like to introduce our guest for today, Carey Bond, U.S. Head of Claims for Lloyds. Carey, you've had an amazing career in insurance over the last 30 years. And so we'll take some time at the beginning to kind of talk through and walk through your experience, your career path. One of the great things that I appreciate about your career is that not only have you served in executive capacities with insurance carriers, but you also spent 10 years as a cat adjuster in the field adjusting claims. So again, Carey, thank you for being here, and tell us a little bit about yourself and your background.
You bet. First of all, I'd like to thank you ladies for having me. It's a pleasure to be here. And in terms of my background, I feel very fortunate to have the experiences that I have. As you pointed out, I left the Army, active duty Army, in the 80s. I had no idea what I was going to do with the rest of my life or career. So I went to Dallas, Texas. I gave myself 30 days to find a job, and if I found a job, well, I'd stay and do whatever, and if not, well, I'd move on. Fortunately for me, Safeco Insurance hired me to be a multi-line insurance field rep for Texas. So that was 2 weeks after I got to Dallas, and I am thankful to Safeco to the training they gave me. They kept me in Dallas for 2 years strictly for training purposes, and they trained me in all lines of claims handling. It didn't matter the line of business, because at that time, Safeco, they wrote anything that you could imagine. And they trained me to handle a claim. It was workers' comp, casualty, general liability, property, automobile, in a body shop for 30 days so that I could learn the anatomy of a car and actually how to repair cars. So the training that I got built the foundation for the knowledge that I have from a technical standpoint that I use still to this day. The other thing that got me into the stormtrooping business is after a few years with Safeco, they gave me the opportunity to actually run and manage Catastrophe. And I just happened to have to pay bills for that storm. And that was inspiration for me to strike out on my own. For the entire decade of the 90s, that's all I did. I was an independent adjuster, and I was a contract adjuster that would basically work claims anywhere in the United States for a fee. And the majority of major catastrophes that happened during the 90s, well, I was a part of it, and I worked them as an independent contract adjuster. It was that background that gave me a feel, an understanding, and an acknowledgement of how catastrophic those events could be, not just from the standpoint of the insurance industry, but from the standpoint of the people that were affected. To go into a disaster area and see the devastation there from a physical standpoint, but at the same time, dealing with the constituents of that catastrophe, to go into someone's home and understand the impact that that event may have had on them. And if you go into a business that is now shuttered and not able to operate, and understand those things are necessary from an insurance standpoint to bring them back to normal, whatever that normal may have been and may be today, is the thing that makes insurance important for us all, because it's meant to bring normality back to unnormal situations, I'll say. So having that experience in the field in all parts of the United States, whether it was the Pacific Northwest, the Southeast, the Pacific Coast, the Atlantic Coast, hurricanes, earthquakes, lawsuits, you name it, I had the opportunity, and people trusted me enough to adjust claims on their behalf. It actually built a great foundation for me when I came back to the corporate side of the house.
That's pretty outstanding to go from a field adjuster to the U.S. head of claims for Lloyds. I think that says a lot about you, your experience, work ethic, et cetera. But also, tell us a little bit about your service. Thank you for your service to our country. And I'm sure that has played a major role in your ability to lead, especially at the operational level you're at today.
Sha'Ron, I think that's a fantastic question. I appreciate you asking it. My military service, I assure you, it has been and remains one of the greatest honors that I think I've ever had. The honor that I will add to that is being able to lead other soldiers in a combat zone and accomplish a mission that we were assigned. As I said, I left active duty Army in the late 80s, and I entered the National Guard. And I've been a member of the National Guard in several states: Texas, Louisiana, Indiana, and Virginia. And I also ended my career in the U.S. Army Reserves. Now, the interesting thing about that is I think the training and leadership background I learned, I will give my father the credit for that. And it was enhanced by my service in the military. My father was a veteran of the Korean War. I learned a lot from him, so that when I did enter the military, it's not that it came naturally, but it was something that was made easier because I understood how it was from my father's standpoint. I was commissioned as a second lieutenant as an engineer, and from there I went on to a platoon leader, company commander, served several staff positions, and at the time I was working for Nationwide Insurance. I was a regional director of property claims for them in the Mid-Atlantic, and one of the greatest calamities to ever hit the United States in recent times, 911. It came about, and I was reactivated to active duty, and I was deployed to Iraq. I was originally sent to be a staff officer in Baghdad, but apparently someone reviewed my background and felt that maybe I could serve better in a field capacity. I had also been in Panama prior to our invasion in the late 80s, and that experience, I was a second lieutenant at the time. I was the youngest person on my team, and I had to learn to lead in that environment. So heavy stress in a very confined territory, if you will, was something that I learned in Panama. It's not that it made going to Iraq any easier. It never is. But a team was put together from the theater so that there were a total of 8 people on my advisory team. The field position that I was assigned to, since my background was as a combat engineer in the military, a team was built around me. It was made up of soldiers and Marines. There were 8 of us, and our mission was to reconstruct the Iraqi Engineer School, redefine their doctrine, and train them to operate as a NATO-based unit would. The Iraqi army had followed the Warsaw Pact doctrine of warfighting. The NATO countries, well, we followed a NATO-based doctrine, and it was basically the defense for NATO is offense. We don't stop and dig in, we move forward, and at the time, that was a doctrine. So with the space of a year as a period that we had, it was to reestablish that school and to train that commander at that time how to lead a command of that size. So the 8 of us were embedded with 250 Iraqis. My assignment was to advise the commander of that unit. It was an Iraqi full colonel, and I had a staff of captains and senior NCOs that made up my team, and we were to teach them how to do all of the military things, while at the same time teaching them how to train as NATO forces train. So all the things that NATO-based soldiers, and primarily US-based soldiers, the doctrine that we use is what we taught that particular unit over the course of a year. If you can imagine trying to train here in the United States where everyone speaks English, well, the challenge that we had there is nobody spoke English. So we had a team of 6 translators that assisted us. And if you can imagine me speaking to you now, and you don't understand a word I'm saying, unless the guy that's sitting to my immediate right shoulder, he listens to me and he translates what I'm saying. And whatever you say, he translates back to me. And that's how we had conversations and conducted training. And it was one of the greatest honors in my life because we were able to cycle 5,000 Iraqi soldiers through that school once we had it established. So to reestablish the Iraqi military effort with a NATO-based doctrine, our part of it is that by the time we left at the end of my year deployment, we had trained 5,000 Iraqi soldiers. So I returned back to the States, and a year later, I'm reactivated again, and I go to Afghanistan. And the privilege and honor that I had was to serve on the staff of the Supreme Commander of all forces in Afghanistan. My job there was to coordinate with NATO headquarters in Brussels to gather war material from all over the world and get it from where it may sit into the combat theater in Afghanistan. The methodology of that is just as we're having this conversation now by virtually. That's how we were operating in 2007. I'd be in Kabul, Afghanistan, and the staff at NATO headquarters in Brussels were on the other end, and we'd find equipment, whether it was helicopters, ammunition, boots, bullets, food, whatever it may have been, to support the war effort from the NATO countries. We made those coordinations so that that material was moved from where it may sit into Afghanistan. And the purpose of my being on the Supreme Commander's staff is each Sunday morning I could brief him on the status of materiel that was coming from NATO countries. And the really cool thing about it is up above the briefing stage was a little eyeball. And that eyeball allowed the Joint Chiefs of Staff to see the same briefing that the Supreme Commander there in Afghanistan saw. So I had 5 minutes to bring him up to speed on what we found, the status of it, where it was, and what impact it could have on the war effort. So that 5 minutes to me was the opportunity of a lifetime to provide the ultimate service to the military and to the country. Now, how does that translate into what I do now? Well, this is where the culmination of the experiences from the field, my experiences leading insurance organizations, and the capacity that I picked up as a military officer comes together so that I'm able to function in the Lloyds market. Being able to take some things that may be ambiguous at times and make them concrete and bring them forth as actions is something that I'd like to think that I bring benefit to the role that I'm in now.
Your experience and is outstanding, and it's clear just hearing the variety of experiences and the level of experience and influence that you've had in your career. It's understandable why Lloyd selected you as its first U.S. head of claims. Tell us about the role that you're in now, your position, and what the position entails.
Well, the Lloyds market demanded of Lloyds that there be a presence in the United States. And this role came about as that ask made by the Lloyds market. If you can imagine the Atlantic Ocean as I won't say a philosophical barrier, but a physical barrier. And in some cases, it may prohibit the flow of ideas, desires, and requests. So as part of the future at Lloyds, John Neal is a current CEO of Lloyds, and part of his vision was that Lloyds needed to modernize the way that it does things. Part of that, or all of it, was encompassed in the future at Lloyds. And right now, we're operating under Blueprint 2. And this is a strategic plan that culminates in 2023. And what that means is that the digital backbone that's currently in place as a part of Blueprint 2, where digitalization of the Lloyds market is underway. Lloyds has been in business over 332 years. It's the oldest insurance organization in the world, and it's successful for a reason. It adapts to change, and it services the market that it brings to bear. So John Neal's view was that as part of that change to adapt to the market, future at Lloyds, Blueprint 2, and part of that is with the United States comprising over 50%, more than 50% of the Lloyds market, it kind of made sense, I think, in his view, that there be a claims presence here in the United States. Now, what does that role entail? What the role entails is driving claims performance as it's never been driven before. That's a broad statement, but what it means in real terms is we take a look at how Lloyd's claims have been handled in the past. We're going to gather the data to see where the change points need to be, make those changes, and communicate those. And with my background here in the domestic market for the past 30 years or better, I think I have a pretty good feel for how the market operates, and the background that I had on the ground as an adjuster, the experience that I've had as an executive leading large organizations with the admitted carriers here in the United States, and the breadth of the geography that I've had the opportunity to manage in. I think that my background gives me the opportunity to have a claims conversation with those claims people that actually service the Lloyd's market. So understanding the Lloyd's portion and understanding the domestic breakdown of how we do claims here in the United States, I think it brings about a great marriage of experience and tradition. So the market says we need someone that understands handling claims in the United States, but can communicate it through a Lloyd's lens. And that's the benefit that I think I bring to the role.
Great, thank you. So let's do a deeper dive into Lloyd's itself. I know a lot of people think of Lloyd's as an insurance company, and it's actually not. We're all familiar with the brand, with the name, especially those of us who've worked in the industry for some time. But kind of talk with us a little bit about Lloyd's. I think there's, again, there are assumptions out there about this industry giant, but if you could kind of delve a little deeper into what Lloyd's is, your customers, how it's structured, I think that would be helpful.
You bet. Lloyd's of London is a building in London. That's Lloyd's of London. The actual Lloyd's market is the insuring part of Lloyds. I work for the Lloyds Corporation. So the Lloyds Corporation is not an insurance carrier. It basically administers the market. The brand has been built over the 330 plus years that it has been in existence. And when the very first risk was written, it was written as a collaboration between people in a coffee shop that says, well, the ship's going to sail. Does anybody want to take a risk that it will make it there safely or not? And the Lloyd's market was born. The Lloyd's market as it stands right now is made up of a little over 60 managing agents and syndicates, 92 or better. It changes by the day, by the month, by the year. And the reason I say that is, again, Lloyd's is a collaborative market. What happens is, let's say that there's a large commercial building, let's say a 50-story residential mixed-use tower. There is no one insurer that will take the risk to insure that building and all the things in it by itself. And what will typically happen is the people that manage that property or own that property will call an insurance broker. And they will say to that broker, I have this 50-story tower, mixed use. We have retail in it. We have residential units. We have office space. We have, you name it, it's in that building. And we really want to insure the building itself, but at the same time, some of the businesses that we manage within the building, we'd like to insure them too. So can you give us a package that will offer that to us and tell us what that looks like? Well, that broker, understanding the complexity of the risk that's there, they will hop on a plane, go to London, and go to that building in London, Lloyds of London, the building, and inside it, they'll find teams of underwriters. And those underwriters, again, they probably won't take on that 50-story building by themselves. So what they'll do is they'll start the cooperation and collaboration process within the underwriting room to provide coverage for that risk. So what will typically happen in some cases, they'll form a syndicate. That syndicate is a team of managing agents that says, I'll take a portion, you take a portion, until they provided coverage for that entire building. So subsequently, it's a collaboration of the Lloyd's market that provides coverage to that 50-story tower. And it's in the 50-story tower in this case is just an example in this case. A lot of people hear about Lloyd's will insure a person's hands or a person's legs or a person's body part of some type, and it does. If there's a complex risk out there, the most probable and probably the best place to find coverage for that risk is at Lloyds of London, in that building in London.
So with that being said, as you described the syndicates and them spreading risk across multiple organizations, Lloyd's must have tremendous financial strength in order to be able to do that, would you say?
I would say, and let me give you a couple of instances. Over the past 15 years, the Lloyd's market, let me make sure I got my numbers right here. The Lloyd's market has paid an average of $2.1 billion per day on claims. I'll say it again, over the past 15 years, the Lloyd's market has paid an average of $2.1 billion per day on claims. Now, keep in mind, there have been a number of large-scale catastrophe events globally, such as the Chilean earthquake, Hurricane Katrina, Hurricane Harvey, Irma, and other major catastrophes that drive that number. Using the term over 15 years, but the average amount that's been paid has been about $2.1 billion today. And to bring that into more perspective, the Lloyd's market averaged $58.6 million per day in 2020. There were over 40 catastrophe events that occurred over the span of 2020 last year, and we spent about $58.6 million a day. Now, hopefully that gives some idea of the breadth of the market and the success of the business model. So yeah, financially, I would say that the financial strength is there, continues to be there, and will be there as our customers need it.
So one of the data points you provided that really kind of put it in perspective for me was when you said that there were globally over 40 catastrophe events in 2020. And so I just think about 2020 and all that we've gone through, but I had no idea that that the world has experienced over 40 catastrophe events. That's pretty significant. And to know that Lloyds has been a part of ensuring that risk says a lot about Lloyd's place in the marketplace.
You bet. Lloyd's is a global market, and granted, a large portion of the market is made up here in the United States. But Lloyd's is a global organization. Typically, if you hear any major catastrophe or major event anywhere in the world, typically Lloyd's will have a part in it. And it's great to say that, but the more important thing is it brings stability to those places where those events happen. And the expertise of Lloyd's in insuring and adjusting the losses that occur as a result of insuring those risks is a beautiful thing about it. So yes, in the United States, we're very aware of the things that happen here, but in the Lloyd's market, any risk anywhere in the world will probably and potentially involve Lloyd's.
So let's talk a little bit about claims. Again, from a fundamental standpoint, the purpose of insurance is to make a policyholder whole, or to get a business or a person back on its feet after some form of disaster or loss. So let's talk to us about the claims handling process with Lloyd's, particularly how claims handling in the U.S. on the U.S. side, which you lead, interacts with Lloyd's of London and or the rest of its global operations.
Well, the claims handling process is essentially the same regardless of the organization. The thing that differentiates one company from the other is the expertise in which they do it. Because in insurance, it's a transfer of risk. And once we as an insurance market accept a risk, it's up to us to, as you say, make the person that bought the insurance whole. So the process is essentially the same. Do you have coverage? And if you have coverage, what's the damage? And then you either pay the damage or you don't, depending on the coverage that you have. That concept doesn't change regardless of whoever writes the policy. Now, in the Lloyd's market, what happens is each underwriter underwrite the risks that they feel are appropriate for them. In the claims process, if that claim is reported, well, they begin the same process. Do we have coverage? Does it fit within the intent that was intended for the risk when it was initially written? And if it is, well, we go through the process of quantifying the loss and paying it. What happens in the Lloyd's market, since the majority of the underwriters are in London, we use what's called a delegated claims administrator, or DCA. That's a term that we use. They used to be known as third-party administrators. If the claim is reported to the broker or the cover holder or the retail agent that sold the policy, well, that starts the claim process in the Lloyd's market. And what will happen is that claim, now that it's been reported through a first notice of loss, is then sent to that DCA, or delegated claims administrator, to begin the process of finding out what happened, what did go, and how do we get payment to this person. Now, what happens here in the United States, and since we're in the United States, that's the part that I'll talk about. We get a lot of inquiries at Lloyd's Corporation. Well, I can't find my policy and I need to file a claim, and can you help me? And ultimately we can, But what we typically will do is defer that person to the person that sold them the policy, because the Lloyds Corporation may not have visibility at that particular time on that particular policy. And there's not a lot that I could tell them because I had no visibility on the underwriting company that may have written that policy. So the person that can help them best is that particular underwriter and the delegated claim authority that's handling the claim. And what we'll do is we'll do our best to match those two together so that they can begin the insurance conversation about settling that claim. And if it involves a legal issue, well, that delegated claims administrator will handle those legal issues through that process with then that delegated claims administrator. If it involves getting the car inspected, or getting the building inspected, or getting a home inspected, or if there's a disagreement in opinion, damages is handled with that delegated claims authority in coordination with the managing agent or syndicate that they're assigned to. So typically, if a person were to call me and says, you know, I hadn't talked to my adjuster in 2 weeks, I don't know that there's a whole lot I can help them with that. And what I may do is ask them to send me more information if possible, and I'll see if I can find out who is handling your claim. But the quickest and most efficient way to get to a resolution is to contact the delegated claims administrator that's handling your claim. So to summarize it, in the Lloyd's market, the previously mentioned managing agents or that syndicate that insures the risk will assign a delegated claims administrator to handle those claims here in the United States for them. Now, that may not always be the case, but it will probably be the case in the majority of times, because some of the managing agents may have their own claim staff and they'll handle the claims. So not all claims are handled by delegated claims administrators or DCAs, but the majority of them may be. So if I could take a moment, I'll cover catastrophe claims, if that's okay, or if you have another topic.
I think that would be helpful, particularly given the fact that we're based in Florida. Catastrophes are something that are a major part of our everyday lives. So please feel free to cover and discuss catastrophes.
You bet. Catastrophe handling at Lloyd's is undergone a dramatic change, and InsurTech is something that I'm sure we'll talk about. But what I'll start with is Lloyd's recently entered an agreement with McKinsey Intelligence Services, MIS, and what that agreement entails is a multi-layered data gathering platform for Lloyd's that's offered to Lloyd's market. And what that means is MIS, they have several data gathering platforms, including satellites, drones, and other data gathering methods that allows us to input risk locations as an event is forming so that we have an idea of what it's going to look like as it's happening. So real-time data gathering is one of the key things that MIS offers the Lloyd's market. And what that means is when you look at it from a sustainability standpoint, in the old days, and the old days is as recent as 5 years ago, what would happen if a hurricane were to hit is, of course, the National Weather Service will monitor it and tell everybody how bad it's going to be, how strong it is, where it is, and what it looks like. So in the insurance business, we start mobilizing resources and staging people and equipment to prepare for it. But we had no idea what things would look like until after it had hit. And then we sent people in to get some idea of how bad the damage was. Well, with MIS, what happens is they're able to pick up a disturbance as it comes off the coast of Africa, track it across the Atlantic, and with the capability that they have, our managing agents are able to provide data to them so that as that event comes across the Atlantic, we know where our risk locations are, And as it comes ashore, MIS is tracking it. We can tell that one of the biggest questions we've had, and to the point about Florida, is what part was damaged by wind, what part was damaged by flood. It's an age-old question that the insurance industry has struggled with for years. Well, with MIS, it is the most real-time and realistic picture we can have to separate what's wind, what's flood, and what's the likelihood that one or both damage that particular risk location. It gives us an idea so that we can start that analysis as the event develops, as it passes, and as it concludes. And what that means to us, and when we look at it from a sustainability standpoint, when you look at an adjuster that has to travel 200 miles because there's no hotels, no restaurants, no things that can sustain a person as they're trying to adjust those losses. Well, with the look down capability that we have from MIS, we're able to look at those losses from a satellite view. And if we need to take a closer look, they can engage the drones that will give us a closer view. And if we really want to get a very focused look at the worst hit areas so that we're not sending people all over the place to figure things out, we're using that technology to figure out what it looks like before we start deploying people. And when we need the verification of what it actually looks like, we can say, instead of sending 10 people to try to figure it out, we can send one. So when you look at it from an environmental standpoint, that's 10 cars that are not moving. There's only one person. He goes there one time. In all likelihood, that's all it will take because the satellite and the drones have given us a view, all sides, and we can very reasonably determine what that damage looks like. The impact to our insurance buying public is that in some cases, and when you look at some of the major hurricanes over the past 10 to 20 years and even prior, where we've seen total devastation, and it's unfortunate, but we've learned a lot. In some cases, when we know that if there's an entire block of damage that may not be repairable, we'll know that without having to send people there. And we can start remedying that situation prior to that person even knowing that they have a loss. So if we pre-plotted those losses, and let's take Hurricane Andrew, for instance, where we saw entire blocks, in entire 10 block areas that were totally devastated. And it may have taken weeks to adjudicate those claims. Right now, with the benefit of MIS to the market, those claims can be settled remotely because we know that if there was a house there on Tuesday, the hurricane hits on Wednesday, we'll know Wednesday night that the house is no longer there. We can contact that policyholder and says, we have an understanding of what your losses are. Let's start talking about how we can get you taken care of. So when you look at the amount of time from a customer service standpoint that you can alleviate some concerns that that policyholder may have, we're able to quantify that loss to some degree, move it along faster, and the impact of having one person that can adjust that loss versus 10 people, as an example, from a sustainability standpoint, an environmental standpoint, a customer service standpoint, I don't know that you can get any better than that.
That's really great to hear. One of the things I think it really shows is just how innovative your use of technology is and how transformative it has been and is in the insurance marketplace. That's pretty outstanding, especially from the standpoint of efficiency and, as you mentioned, customer service. That's outstanding to hear. So I know one of the major trends that we're seeing in the Florida insurance marketplace is the increase of the frequency and severity of residential property claims. And so I just use that as an example. Are there any things that you've seen or are seeing from a claim standpoint that folks should be aware of or should just be looking out for? Things in the marketplace from a claim standpoint?
You bet. As I said, Lloyd's operates in a global fashion, but the things that are occurring in the United States, and it's something that you probably hear about every day in the media. There's supply chain issues out there that are having an impact, and what that means is new construction, the residential home building market, and when you look at the shortage of truck drivers, in some cases there have been disruptions in fuel supply. And in those cases, petroleum is a basis for a lot of building materials. So when you look at framing lumber, you look at shingles, roofing shingles, siding, and a lot of the things that are going into a home, the manufacturing base has been impacted by supply chain issues. That's something that raises some concern with the insurance industry, because if a home is damaged, you're competing for the same materials that a new home builder is requesting and requiring. So who gets it? Well, that's still being determined. The other part is we have to realize that we're also operating in an environment that causes us to use extreme caution as we're out meeting with the public. There are health concerns out there that from an industry standpoint, we have to be cognizant of. So it gets kind of back to that InsurTech approach. We still have to have people on the ground that will knock on a door or go into a business and say, I'm here to adjudicate your claim. In the environment that we're all aware of here in the United States, there are certain things that are happening within the environment that raises concern, and we have to be cognizant of that. So all the appropriate PPE and all the health precautions that have to be taken, well, we keep those in mind in the Lloyd's market. So we're able to do things remotely, certainly do those things. But at the end of the day, it still requires, in some cases, person meeting another person to discuss, review, and adjust that loss in person. So when you put together those supply chain issues that are out there, the frequency of events and global warming is something that Lloyds has taken a proactive approach on. They've entered into accords so that the global warming issue can be reviewed, discussed, and appropriate measures taken. So we're cognizant of those things. We keep those in mind as we put the claims process into place.
Thank you for sharing that. So one of the things I'd like for us to spend some time discussing, especially as we come to the end of our time together, is Lloyd's commitment to diversity and inclusion. I know that Lloyd's has made a significant commitment in that area. And you personally have been an advocate for diversity in the insurance industry for a long time, as a longtime member of the National African American Insurance Association. So kind of share with us a little bit about Lloyd's commitment and the things that Lloyd's is doing and things that you are and have done in that area.
Well, again, I would say that from an organizational standpoint, diversity, equity, and inclusion is something that has been embraced by Lloyd's. And it starts at the top. John Neal has made DE&I not just a talking point, it's an actionable item. It's a item that's part of the leadership team's performance objectives. It's one of the objectives of mine. And one of the things that what that means to me is NIA. I have been a long time member. I believe it is a valuable institution. And to bring awareness, especially in the African American community, but it's not just the African American community that it includes. When you look at all of the various organizations out there, the ethnic groups and everything else that we talk about frequently, and over the years, it received a lot of lip service. Well, at this time, Lloyd's is actually taking action. I want to say it was maybe second quarter that Lloyd's had made a grant to NIA to help further their efforts in the DE and I arena. And right now, in the United States on the Lloyds team, Dawn Marie Black is the coordinator for our DE and I efforts here in the United States. And I work closely with her. And what that means is at NIA related events, I participate in those roundtables, those particular blogs, and anything that I can do to talk about diversity-based efforts. CLM is an organization that I'm part of the corporate board, and I'm on the Diversity, Equity, and Inclusion committee with CLM. And the big deal is this. If you want to talk about diversity, I don't know that any better example could be made other than my presence. The opportunity to fill this position in the United States, and I happen to be a person of color that fills that position. The other part of that is I'm qualified to do the job. It just so happens that I am a person of color. I'll share this with you. During the interview process, I presented the question to the people that were interviewing me. And at the time, and to some degree, I still believe this. In the insurance industry, you don't see very many people that look like me in these types of positions. So the question that I presented to the people interviewing me is that, oh, you don't see many people that look like me for the type of position that you're talking to me about. Does that bother you? And the thing is I was interviewing them as they were interviewing me. And to be honest with you, that was one of the questions that was important to me. And their answer helped determine whether or not I would accept the position. And when they said, you know what, there's no issue with us. As a matter of fact, we think it's a plus. And that was part of the decision for me to take the job. Because to me, when I started in the insurance industry, if I saw another Black person in the hallway, I didn't dare stop and talk to them. Now, when I came in the door, I had no issue with that. But as I got out into the industry, there weren't very many people that looked like me that I could talk to and gain an understanding of the business. Insurance is a very conservative business. And at that time, back in the late 80s, to see 2 or 3 Black people in the hallway talking didn't happen. But over the years, it got better. And I don't know of a better place to be than Lloyd's right now to talk about this issue. And having it as a performance metric for me, and I know that my leadership chain has the same focus, same impetus, that this is something that is not just talked about being important, it's being demonstrated as important. It's incentivized, it has leadership, sponsorship, and it's being important from an organizational standpoint. And I'm proud to be a part of Lloyd's for that reason, among others, but certainly for that reason.
Thank you, Carey. We are really honored that you have spent this time with us today. Thank you, and we applaud you for your service to our country, your service to the insurance industry, and your vast wisdom and experience. So again, thank you for joining us, and thank you for sharing your insight in the insurance marketplace with Gunster and the All Lines Insurance webinar. With that, we will close for today. Thank you so much.
Thank you for having me.